If you've been watching the news, you already know TransUnion has been making moves in the direct-to-consumer affiliate market. First, they announced their purchase of Monevo. Later, they announced a strategic partnership with Credit Sesame. I recently reached out to Greg Cox, CEO at Monevo, to see if he'd be willing to chat with us on the podcast, and he was kind enough to accept that invitation. Here's a little bit about Greg. He is Group CEO at the Quint Group, which he co-founded in 2009. There, he owns and operates a global portfolio of fintech businesses. Greg also acts as the CEO for Monevo, one of the Quint Group's largest businesses. To quantify the scale of this a little bit, the Quint Group has generated over £500 million of revenue since inception without using any venture capital or third-party investment. It all came from an initial £25,000 check from Greg and his co-founder. Greg has built and exited a number of businesses and recently signed a definitive agreement to sell Monevo to TU. Let's jump into the conversation with Greg. Greg, good to see you. Thanks for taking the time to chat today.
Pleasure to be here, Carlos. Looking forward to the chat.
Where do we find you this morning?
Central London today, a rainy, murky, grey England, which is pretty much what it's like for most of the year.
Standard February. Yeah, I was there a couple of years ago in December, and that sounds about right. So tell us a little bit about Monevo. What do you do? What problem do you solve for lenders?
Sure. So we founded Monevo in 2016 out of the UK. Really what Monevo does is allow lenders and banks to distribute highly qualified credit offers to third-party websites, aggregators, and also kind of more laterally within their direct channel as well. So the problem that I think lenders have faced over the last, during the advent of essentially digital within financial services has been, how do I get my offers in front of the right customers? I think that landscape has changed materially over the last decade. The amount of places customers shop and could see credit offers has expanded exponentially. So how do I deliver offers to all the different places that I could do? And secondly, if I've already got the offers there or my product's already there, how do I make sure I get the right customers? And how do I make sure those offers are really qualified and targeted so that when a customer clicks, they have a great experience, it converts really highly, I get the right type of customer, and the aggregator or the originator of the customer gets gets a good outcome too and doesn't kind of deliver a disappointing solution to that customer.
Walk us through a little bit. There seems to be a theme there around targeting, and I start to think credit bureau data, that sort of thing. What credit data are you plugged into? And because just given the recent acquisition with the TU, is it TU only data? Can I access other bureaus? Like what model? Like what do I need to give you if I'm a lender in order to access
really
the product?
Question. So really what we're providing is a technology, decisioning, and integration layer for lenders that's connected to a bunch of different data sources like you talked about. Obviously we have the TransUnion acquired a stake in the business 3 years ago. We were already working with them before that. So we're taking all the available data that's within TU stack, but we're also integrated with other credit bureaus too. So in the UK we're integrated with Experian and a bunch of other different data providers. So as we work with more lenders and banks, they've asked us to integrate different services, and as we integrate those services, we make those available to other lenders and banks. But predominantly, especially now TU, we're in the process of acquiring Monevo. We're a kind of TU first shop, so we'll look to deliver an optimal solution leveraging TU's data assets, which are pretty significant across the US and the UK, which are our two biggest markets. However, we can supplement that with, the bureau from, any of the other bureau or data from any of the other bureaus and a whole bunch of other, data providers, whether it's fraud tools or other things, lenders want to integrate, we can support all of that.
Let's say I'm a US based lender. I have TU, like I already work with TU on the back end. Do I have to do anything? Do I have to give you my model in order to deploy on the publisher side, or can you just tap straight into my backend model that already sits with you? Like walk me through the mechanics, I guess, on how to get onboarded.
We're able to support a bunch of different scenarios really to essentially deliver on what our customers want. So we can host your model on Monevo. So we host models for well over 100 lenders globally and banks on the platform, and we can support by now pretty much every different model type and language that they're produced in. So some lenders want us to do that, and we provide a kind of single point of access to that model within the market. We have some lenders and banks that want us to go and access the model in somewhere else that it exists. So two good examples of that. One is where they've already got a model within TransUnion. So we have a direct pipe into kind of TransUnion's modeling environment where they've got existing models hosted for banks and lenders. So when we first started the partnership with TU, some lenders would say, oh, well, I've already got my model with TU that's hooked up to my back end. So we quickly figured that out and ended up building a pipe into TU to do that. So if your model's in TU, no problem, you can seamlessly turn it on. Your model remains ring fenced, so it's actually not on the Monevo platform. It's on the, it stays where it is. And then the third is, I guess the other one is where the model's sat on something else. So it's sat on on a data robot, on an Amazon SageMaker, some other model hosting solution. Again, we're probably plugged into most of those already, but we can do a bespoke integration to wherever the model is. So really what we try to say to our customers and to the lenders is, look, we can support different flavors of this, whatever suits you. Generally, within 99% of setups, at the very least, we'll have like a credit policy set on Monevo's platform, so a comprehensive set of initial rules, which will then push the inquiry through first before then calling a third-party model for the ultimate answer. So that means that the lender's not getting their system hit by millions of customers every single month. They're getting a very qualified customer, and we're hitting the model just to sort of take out the last 20-30% of customers that the model's knocking out, if that makes sense.
Got it. That does make sense.
What's also important is the kind of model hosting environment within Monevo, and all the rules are all self-serve too. So the lenders and banks can log into Monevo's cloud solution and make updates and update all their rules and models directly themselves.
Oh, got it. I can use that cloud environment regardless of where the model lives? Like whether
Correct.
It's hosted at TU or with you guys? Okay.
Yeah.
Got it. Well, that's triggering other questions, but I wanted to go to the publisher side for a second here. Walk us through, like, can you connect to any publisher, only some publishers? Like, help us understand your publisher network.
Yeah, so if a lender's using us and we don't work with a publisher, first of all, then they can bring that publisher to us and we'll work with the publisher to get them integrated. So really, you can use Monevo to manage all of your own direct relationships that you already have. But in reality, given the scale of Monevo now, we're integrated with most of the big publishers in most territories. Kind of, you can count them on one hand, the ones that we don't have in place. So, in the US, we work with LendingTree, NerdWallet, the Red Ventures properties, Bankrate, the Points guy just went live the other week. In the UK, ClearScore, Credit Karma, Confused.com, most of the major aggregators, again, in the UK. So we have about 200-300 pre-integrated publishers across both territories. And every week, every month, the number of those publishers, is increasing. So if they're already on our network, then great. It's a very simple conversation. We can just turn it on. If not, we'll work with the publisher to get them integrated.
Got it. Again, on the mechanics side of this, if I'm a publisher, let's say I'm NerdWallet, for example, and a customer comes through expressing intent for, say, a credit card, and they say, I want a credit card. They give me enough information to do a soft inquiry. Is NerdWallet doing that soft inquiry, or are you guys, like, what's the mechanics there of the credit pull, and who, I guess, help us understand how the models fire, and how that might be different from a model where you weren't partnering with the publisher.
So we have a couple of different business models. One we call Credit Layer, which is a software as a service solution, and one which we call Marketplace. In the Marketplace scenario, Monevo is acting as the credit intermediary, essentially the broker. So we've got a relationship with the lender. The lender's paying us the commission, and we're then paying it on to the aggregator. On the credit layer, the SaaS side of the business, which is now the bigger side of the business, the lender and the aggregator, or the lender and the affiliate, have the direct relationship. So in the Marketplace scenario, Monevo will, more often than not, will pull the score and will leave a footprint as Monevo. In the Credit Layer scenario, the footprint will more often than not be in NerdWallet's name or LendingTree's name, where the inquiry is originating from.
I want to pause here for a second to tell you about one of our sponsors, Spinwheel. They've built an API that streamlines your lending application form with just 2 fields. When a customer shares just their birth date and phone number, they can go grab all the information needed to pre-fill their application form. So regardless of what channel you play in, you know that the higher the application rate goes, the lower your cost of acquisition becomes, and the more media you can buy to generate growth. Additionally, they can give you real-time verified consumer credit data and seamless payment processing, which can help you serve customers beyond the initial application. To see a demo, go to spinwheel.io or check out the link in the show notes. It'll hook you up straight with their head of growth. So I was reading about the company. It looks like you bootstrap this whole thing, which is incredible.
Yeah, I did for my sin. Yeah, which, some days I think was a great thing, right? And other days I think, why didn't I take some of that venture capital money that was freely available over the last kind of 5, 6 years? So yeah, we did. The wider group of businesses that Monevo is part of, I guess what makes us different really in terms of fintech is we built the business organically, when we started the wider group, 13 years ago with £25,000. And we worked out how to make some money and then we've reinvested that in. So it's been very much an organic journey. So yeah, I think that's been great. It's obviously now we've sold the business. I guess you get a return on that because, myself and the other shareholders own the business rather than, an investor. But there's pros and cons to the kind of bootstrapping option. I think it gets you really focused around making money quickly because, getting to profitability is kind of the core priority. So I think it drives really good disciplines on that side. But other times, it's tough bootstrapping a business. You always want more resource. We could always hire more developers, even today, more
Right.
commercial guys. So there's a trade off, but it's worked well for us.
What was the product in the early days more or less what it looks like today, or was it a totally different
Mm,
vision, totally different setup?
No, so the product in the early days was uh, part of what we have now. So we started off with just the marketplace side of the business over in the UK, and we built some of the first kind of API integrations with some of the fintech and online lenders in the UK. So the initial sort of proposition was giving publishers and aggregators in the UK access to a panel of lenders through a single API integration, where we then had, it was a one to many kind of API integration. So that's where we started. What we quickly realized was that while some online lenders and fintech lenders had APIs that could operate at reasonable scale and work with us, there were, as we try to address more of the market and really solve some of the bigger problems, especially from some of the big card issuers and the big banks, we realized that actually we needed to start to build really quite complicated model hosting, capabilities. So it started to sort of move through the gears there in terms of capabilities. And on the other side of things, we also found out that what came to realize that while some publishers were happy to manage their own presentation layer and integrate with our API, there were especially kind of smaller publishers, they didn't want that technical overhead. So we built a whole white label, brandable kind of offer display layer and kind of application form flow and all that side of things. So both those things start to happen. And then really the kind of the next big step after that was really the move to the SaaS model. So where we got to we moved so far along with the marketplace model, but we then realized that big participants in the market wanted to maintain their own direct commercial relationships with, that big aggregators or with their big lenders, which is completely understandable. And then we said, okay, so, our business model's stopping us from winning this business. Our potential customers, they want the technology, they want the capability that we've built. That's very difficult for them to build and expensive, to manage and ongoing. So we then separated out and created a credit layer solution, which is really, kind of supercharged the business over the last 2-3 years and allowed us to address, the whole opportunity really.
Got it. And when, having been in the space for many years, I've seen publishers and lenders build APIs directly with one another. Like, what's the advantage of running through a Monevo versus having a publisher and a lender kind of build this thing independently?
I think it's a good question. So I think, in our view, if a lender builds an API, it's secondary to their core business. So they're not a business that's set up to build brilliant credit offer distribution APIs and all of the technical infrastructure, reporting, and capability that goes around that. So our view is we've invested millions and millions of dollars in building it, building something that's used by hundreds of lenders globally. So really, a lender can benefit from all that capability, all the resource that's gone into it. And it's highly likely that what we have is going to be a lot more sophisticated than what you build internally. So that's kind of one argument I'd say to a lender, which is even if you go and build it, you're not going to build what we've built tomorrow because you're going to do it over the next 3 to 6 months, and it's not possible to do that. I think we also benefit from having all these use cases running the whole time to understand what to build and how to build it and how to make it efficient. So every lender or credit provider that uses the platform is benefiting from all the learnings that we've had with all of their peers, etc. So again, you get a more finessed, you get a more finessed product. I think the other really simple thing, and this goes both publisher and lender side, is if you have 20 relationships, technical, commercial, compliance relationships with those parties, that's a huge burden. And I think we understand that because we do it all day, every day. I think that, the reality of that, rather than using a business like ours to facilitate that, there's a lot of benefit, both economic and I think also just purely from a kind of compliance and governance and, InfoSec perspective. There's a lot of time that can be saved, and really what we're trying to do is allow lenders and the affiliates or aggregators to really concentrate on their core businesses, right? Which is finding customers and serving customers.
Got it. Okay. And if I'm understanding kind of the economic exchange here, I think you're sitting between the publisher and the lender, but you're making the business that they do together more efficient, right? The approval rates get higher, the monetization for the publisher is better, the approval rate for the lender is stronger, the user's more qualified. So I see value going both ways there in the marketplace that you've built. How do you, what's the economic model there? Is it the publisher that pays you? Is it the lender? And what's the nature of those commercial agreements?
Sure. So at a headline level, 99% of our commercial agreements are aligned with with good outcomes for the lender and the publisher. So to sort of boil that down, is what does that mean? We're either paid each time a card or a personal loan is issued, a fixed fee or a percentage of that card or loan. And that's true on both the credit layer side of things and and on the marketplace side of things. We do have transactional pricing as well. So we will have some lenders or some publishers that want to pay just on a transactional basis. For us, that kind of moves that alignment with what they're trying to achieve away. So we're happy to support it, but we kind of want skin in the game to say, look, you're trusting us to deliver this. We want to get as many customers converted for you as possible. In terms of how we're paid, that varies dependent on the model. So we have some scenarios where we're providing the service to the lender as our core customer, and they're paying us for every offer that's distributed. On the other side, we might be engaged by the publisher to build out their kind of prequel solution, in which case they'll be paying us. And there are also instances where actually the cost is shared across both the lender and the publisher. So, that's reasonably common as well, where they'll say, look, you're optimizing this relationship between us. Essentially, you'll convert, 1,000 customers that would result in 100 cards issued. Now 200 cards are being issued. Everybody's benefiting from this. So let's share the cost and share the upside.
Got it. Okay. That makes sense. That sounds pretty flexible, which is great. This is a quick plug here for my marketing agency. It's called New Market Growth. We do nothing but help fintech lenders accelerate their growth in affiliate marketing channels. Our services are both strategic and operational. And if you want to learn more about how we can help you, find us at newmarketgrowth.com or email me directly at carlos@newmarketgrowth.com. One, I guess, concern I've heard from lenders when it comes to pinging APIs is the concern around just generating too much expense with the credit bureau on these soft inquiries. So in an extreme example, if I have to ping the bureau 200 times to generate one customer, then my cost of acquisition just gets too high, right? It becomes unviable. So in a partnership with Monevo, where should I expect the cost of the soft inquiry to go? Is it with you? Is it with the publisher? Do we share it all again? Like
Yeah,
how do we
so
think about that? Yeah.
that's another kind of problem we're solving. It's not the core problem, but this
Mm.
kind of expense with APIs, which is great. I've got an API, I've got it set up, and then the realization that you're going to get sent a million pings a month, and that's going to cost you, cost you a lot of money. So what are the reasons? What part of the thesis for partnering with TU was how does Monevo create different economics from a soft inquiry and credit data cost? Because we had a huge cost in our, in our business. So the partnership with TransUnions allowed us to kind of look at the economics of that differently. I can't share with you exactly what that looks like, but we don't have the same economics as lenders or publishers in that way. At the start of the call, do you remember I mentioned that at the very least, we'd have a credit policy and a pretty defined set of rules, even if we were interacting with a lender API or a lender's third-party, model hosting solution. What that does is, at the very least, Monevo will take all of the, 80, 90% of the wastage out of that. So where the lender is paying for soft inquiries themselves, we're reducing that by 80, 90% because we're taking out all of the, most of the noise. And then they're executing a model. If the model's hosted on our platform, all of the soft inquiry cost is priced into our, cost with the lender. So they're, given that we're aligned on the outcome, they're really only paying for that inquiry cost, that data cost, if they're issuing a card or if they're issuing a loan. There are differences on that too, but yeah, we're providing a package solution.
Okay. So it sounds like you're solving that problem for me of
Yeah,
like, I
completely
shouldn't
solved.
be worried about all these pings. Okay, got it.
Correct.
Uh, and I would also imagine you're pinging once and you're running, if you have 50 lenders partnering with you with a given publisher, you pull the data once, you run 50 models, and then you can display the offers to
Right.
the
So it's
customer. Right.
far more efficient in that way anyway, because we're using
Right.
one credit pool so we asynchronously execute all the models alongside each other, using this, a single pool.
Got it. And when I think about when the model gets executed, like if I'm just putting myself in the customer shoes, if I think of a platform like Credit Karma or Wallet Hub or Credit Sesame, I'm authenticated. The publisher already has my data. Theoretically, the models could be firing before I even see an ad. That's kind of model one, which I would consider as kind of early up funnel, right before
Yeah.
the offer served. And there's another model which I would call more like maybe mid funnel, where I've done some shopping, I've expressed interest in seeing what I qualify for. I fill out a form, and then there's a soft inquiry triggering. Like, do you all fire models on both of those cases, or do you only work with one type of publisher?
So we generally, the latter of the two options you talked about is generally the model we support. We do have some publishers that, are running certain customers, through certain lender offers on logins, to display like a pre-approved specific offer for them. We're also working on some batch processing capability too, where we're essentially creating like a batch-like scenario as you would have with direct mail in the States, so that publishers can then start to use kind of what would essentially be kind of pre-qualified offers via email in the same way as you would get,
Hmm.
with kind of, direct mail, although obviously there's some slight differences to it without
Right.
going into the detail on that. So that kind of batch solution is something we're looking to deliver over the next year or so to again give publishers the ability to push, you're highly likely to be pre-qualified for this offer. Click here, and then they go through the second phase, the mid-funnel phase, as you said, to qualify that in real time. But ultimately, for a customer to get clickable offer, it's a real-time pre-qualified offer from us. So, the bureau's been pulled a second before, so it's completely up to date. And there's no kind of drag or drift on
Got
it
it.
as a result.
That makes sense. So if I'm thinking again from the lender's side, where when I want to deploy marketing budget to targeted, what I would call targeted channels that fit my credit box really nicely,
Yeah,
I have affiliate and I have direct mail. Those are generally the ones I see issuers gravitate to early. And then there are channels like paid search, social media, and there's some emerging channels, TV, radio, things like that. where I've seen it's much more difficult to get your media targeted right in that zone that is going to fit your underwriting. Do you all have any plans to help lenders in either search or social or channels outside of like the affiliates we've been talking about so far?
Yeah, so I'll give you kind of I guess bring that to life in, 2 or 3 different examples. So I think one really interesting channel is what we call the direct channel. So how can we help lenders and banks serve their own customers, right, that already exist? So we delivered a solution for US Bank in their app, and across a bunch of their partner banks' apps, so that when customers logged into their app to check their balance, we're able to push a pre-approved or pre-qualified US Bank credit offer. And the take-up's been brilliant on that. What we believe, what's happening out there is a lot of US Banks customers are going to a Credit Karma or a NerdWallet or whatever else to go and shop their own products. So the first way we're helping them is how can they deliver their own product to the customers they've already paid for and they've won, and how do we make them more efficient at delivering offers? So that's a really popular kind of and growing channel for Monevo. Because if you think about it, all the big banks already have all the customers already. So it's crazy in some ways that they're having to get them back from an affiliate when they're already their own customer. So I think that's an interesting space. We're doing more and more the flexibility of the platform, the kind of embeddable form flows and stuff we have is allowing us to sort of do more partnerships with what I call kind of non-core financial affiliates. So not some of the names we've talked about. So we're working with everything from airlines to other marketplaces type environments where people, to give an example, something like eBay, right? When somebody's shopping for looking at boats on eBay, for example, right? The jet skis on eBay, could a qualified credit offer be interesting for them at that time? So Monevo's sort of tech can really sort of broaden that horizon. So there's a lot of publishers we're talking to, everything news sites, marketplaces, like I just mentioned. So I think that's interesting. I think on social, we've looked at, and I guess across paid search, like where and how can we add value? Because ultimately it's the lender's brand or the publisher's brand that's being promoted on social. Really what we're doing is going back to the kind of core focus of when somebody comes in top of funnel, whether it's through PPC or social, they're getting an offer that can convert for them and that generates a return on spend, and not just clicking out to the lender where they're not going to get approved and the dollars spent on PPC or social. So we're not doing anything directly within the social channel of PPC, but we're certainly helping lenders perform much better on there and other people that are marketing on there to make sure that kind of, as many of those customers that they capture find the right home, essentially.
Got it. Okay. No, I think I follow that. But playing it back for like in a social channel, it sounds like you don't yet have an integration with, say, a Meta or someone like that, where Meta can call the model at the very top of the funnel before serving the ad, but you can call the model as someone's walking through the funnel and say, "Hey, as I'm determining what offer to show, you call the model there," kind of down the funnle, it sounds like.
Yeah, for
Okay.
sure. What we have had conversations with, I mean, we've had conversations with all the fangs. We had some, we've got ongoing conversations with Amazon where we've been talking to them about, because they're a provider, they're presenting financial products themselves. So essentially, it's a marketplace where Amazon's maybe interested in becoming a publisher. So, we're talking to groups like that, say, how can we get those embedded in places where they're not currently embedded? At the moment, Google obviously have their travel search within Google. So if you search for a flight, they'll serve you actual flight details. Places like that I think are really interesting to kind of move pre-qualified offers up, and we're obviously very keen to talk to those companies about doing it, but we're not currently doing it.
Got it. And you've mentioned pre-qualified a couple times in the context of what the consumer sees. Is that always the way Monevo-based offers are presented, or is there a spectrum of different messaging that the consumer is going to see?
Yeah, so that's a good question. So I mean, we operate across 3 different territories, so there's different kind of market specific nuances to how things are talked about. But essentially, things fall into 3 different buckets. Really, we've got pre-approved offers in all territories. So these are offers with essentially perfect approval odds, probably just subject to some kind of fraud or KYC check. So, credit affordability is has been pre-approved, and got pre-qualified, which is a very high level, which is a term we use in the US, not something we use in the UK. Very high level of kind of certainty. You're looking at kind of around 90%. And then we've got, what are essentially qualified offers that, there's varying levels of probability. In that scenario, just so you understand how we manage that, in the UK, we use an approval odds system. So, or an eligibility score. So your, 7 out of 10 customers like you will get approved. That works really well. In the US at the moment, we're seeing, we will share with the publisher what the lender's approval rates are for the model that's being executed on our platform. And then the publisher will currently, which isn't super helpful, will come up with a way of describing that, which differs from platform to platform, the lender accepts. I think in the UK, we've got quite a standardized system now, which I think is good for consumers. It's good for lenders. I think, I know the Monevo guys will be working on that in the US market, because I think if things become more consistent, consumers understand it better, ultimately, delivers better outcomes. So hopefully that answers your question.
Yeah, no, that does. It does.
Clear.
Yeah, no, it's more or less, and I see the divergence of standards and different messages in the US. I want to take a quick break in the action here. If you want to support the show, the number one thing you can do is go to thefreetoaster.com and sign up for our newsletter. You're going to get a couple pieces per week of news, information, insights, and podcasts like the one you're listening to right now at the intersection of marketing, lending, and technology. That's our niche. We don't plan to go outside of that. It's the only publication I've seen out there on the internet that dials into this zone. So if you want to support us, sign up and share it in your favorite Slack channel. I'm actually intrigued by what's going on there in the UK around the standardization. Was that a regulatory-led effort, or did the commercial companies just kind of agree on a standard that worked for everybody?
So actually, what happened in the UK was driven by a couple of things. I think the approval odds there was a company called HD Decisions, which is now owned by Experian in the UK, which competes with Monevo to some extent. And those guys the original founders of that introduced the approval odds system, and they were delivering the first eligibility scores in the UK, and that kind of stuck. And then more people that came into the market essentially adopted that. So, and then the term kind of pre-approved, that went round the houses a bit, a few years back, about what does this mean? And then the market's kind of aligned on it. So we've got a relatively standardized setup in the UK, which is kind of, approval odds or a kind of pre-approved flag. And then we have sort of, two other kind of standards. One is guaranteed rate. So you might get a pre-approved offer with a guaranteed rate. So that means you're pre-approved and you're guaranteed to get that rate. You can also have a 7 out of 10 approval odds, but with a guaranteed rate. If you are approved, you will definitely get this rate. So that's a pretty clear standard. Maybe there's some work, maybe something we could try and crack, Carlos, trying to get some standardization in the US on it. But I think it will come over time.
Got it. So, so I guess from my perspective, it sounds the platform sounds very flexible with regard to where I host the model. It sounds flexible with regard to what I present to the consumer. How would you describe your ideal customer from a lender standpoint? Like what boxes would you want to check on a potential customer that tells you, hey, this is likely to be a good fit here for Monevo?
To be honest with you, I think we're lender agnostic to an extent. I think subject to obviously the lender being properly licensed and so on and so forth, and delivering kind of ethical products. That'll be our first tick box. We are, we will work with most we'll work with most lenders. I think if they come and say, look, hey, we want you to support us in our direct channel, then, as long as they met those kind of basic, standard criteria, we're more than happy to work with them. I think if they were looking to access our kind of publisher network and help us deliver us help them deliver those offers into that publisher channel, we would then just say, look, are you going to be attractive within that channel? We don't lead them down the garden path and say, well, look, you've signed up with us, you've invested a lot of time and effort, but actually none of our publisher network wants to do it. So really it's, look, we can provide you the solution. Let us go away. If you want us to do the work within our network to see what the appetite is for your product, we'll do that and then come back to you and be very honest about that. But if you've got your own network that you want to build out, then we can support that, and then that's down to you.
Got it. Okay. So with TU's acquisition of Monevo, and then more recently they announced a strategic partnership with Sesame. It sounds like Sesame, or at least the way I read it, Sesame is going to be on the back end. TU is going to be white labeling like a D2C marketplace product. I'm curious, what should folks expect from Monevo specifically over the next 12 months now that the TU integration is kind of going to go forward?
Yeah, so I think the acquisition by TU is really, really interesting. So over the last 3 years, we've worked very closely and successfully as two companies. I kind of always described us as the speedboat and them as the super tanker. And I think what we've done is really understand how to leverage all the assets that exist in TU in Monevo. So the original partnership thesis has worked really well. I think where we've got to is we've been co-working, in partnership on a whole bunch of these deals and initiatives. Obviously, we've done a lot in the card space over the last year. I think with now the full acquisition by TU of Monevo, I think we can all see that can be taken to the next level. And what we'll see is greater integration of products, a greater integration of Monevo services alongside some of TransUnion services, the ability to sort of bundle and access Monevo with TransUnion services. I think you'll see the kind of capability continue to improve as we get more and more out of aligning the kind of data of TransUnion with the objectives of our lenders across the platform. We'll also see Monevo moving out. So we're currently personal loan and card are the two core areas. Obviously, TransUnion, we've built the playbook with card and personal loans. TransUnion obviously has a lot of presence within auto and other areas too. So you'll start to see Monevo, I think, move into other verticals. I think you'll see it materially broadening the types of publishers that Monevo is integrated with. So, we have a lot of publishers now in the pipeline that are kind of what it's called non-core financial, but have huge customer, huge amounts of customers on their platforms or eyeballs on their website, which is really interesting. So I think you'll just see more investment in Monevo, movement into new verticals. Some of the bigger banks, US Bank went live literally a few days ago on the kind of aggregator channel with Monevo on card. I know Chase is very close to going live, which is the biggest card company in America. So you'll see the last of the kind of big banks that we don't currently deal with live on the platform, which is really exciting. And then I think we'll continue to certainly we've been talking to TU about what other markets we can take Monevo to, and I think there's some interesting markets. TU operates in 45 territories globally, so the Monevo team is very excited about where else can we take Monevo with TU.
Awesome. Well, it sounds exciting. I look forward to following along there. If I'm a US lender, what's the best way to learn more about a potential partnership with Monevo?
I think get in touch with the Monevo team in the US. I mean, if you go to Monevo.com, you can see the site. You can fill in a form. David Brooks leads the US business, so his email is dbrooks@monevo.com. I'm sure he'd love to hear from you for lenders listening to this. And give us a call. We can tell you a bit about what we're what we're doing, and no obligation. Happy to share how we've helped other lenders. And we're just keen to talk to more lenders and see how we can make the market for everybody more efficient.
Love it. Well, Greg, you've been very generous with your time. I appreciate you chatting with us today, and I look forward to connecting with you again sometime soon.
Awesome, Carlos. Fantastic to chat. Thanks for taking the time to listen to it.